Hey guys, I want to do a segment on just best practices for insurance. That would be the state insurance laws will describe what the best practices are, and each state's a little different. I had done an earlier segment that spoke on the National Association of Insurance Commissioners, that's the NAIC, and they have an unfair property casualty claim settlement practices model that it's a guideline. They want people to at least, each state, the commissioner, to adopt some kind of rules that fall within these guidelines, but each state is different and each state has their own right to rewrite them, but for the most part, they adhere to these and they may change dates and have different practices, but they're pretty much all the same. Anyway, what I wanted to do is just kind of tell you, give you a definition, what the purpose of it is, and give you some definitions. You're not going to learn everything from this, but at least you know that there is a higher governing power that oversees the state level. And this all started for many years ago, decades ago. It started off as fires, and the insurance companies didn't want to cover fires, but because how buildings were built back in the 1800s, a fire could catch and then just obliterate a whole block easily, and they needed insurance to pay for that. So the government was, contemplating, do we handle it? Do we take it over? And each state was like, no, if you want to do guidelines, that's fine, but it should be up to each state. So there was a fight there, which I'm glad the federal government's not overseeing it. They just set up the guidelines in each state, because you have the ability to vote in who's going to run your state and who you think best serves your state. So it's a lot easier to control your state and what your state does than to try to control the federal government, right? So that's where all this came from. The standards within the regulations are minimum standards. So, they're just standards. Again, I said, you don't want too much overreach on the federal government. So they set the minimum and they go, look, we're not going to tell you what to do, but you have to at least do this. Every policy has to cover fire. So even if you had the worst policy, the most basic policy, it's going to cover fire. Anyway, workers' comp, fidelity, surety, broiler, and machinery, they're not included in these regulations. That's because they're specific by state, because they could have state law that kind of governs these things. So they're just going to go basic, really, like I said, the basic policy on fire, to make sure no policy ever excludes fire. Anyway, so the definitions for the Section 3, they note that a claimant includes the insured, and a first party, that's you, the homeowner, whoever owns that policy. So, and it's its legal representative. So, for instance, it could be a lawyer on your behalf. That means that the attorney hired by either the insured, which is the policyholder, or a third party in a car wreck. You hit me and I have to get an attorney to sue your insurance company. That would be the attorney in that. They're considered the claimant, and they must be granted the considerations that are outlined. So even an attorney works on a claim. The insurance company, even if they don't send it to an attorney and they're still handling it in-house, which they'll have adjusters work on legal stuff. So the attorney that you hire could still be dealing with an insurance adjuster that's a non-attorney, that they can't talk to you. They can talk to your attorney, but your attorney would be talking to them. And a lot of times attorneys like that, because that means they're going to try to attempt to settle it before it goes to the insurance defense attorneys. Also, the time limits are expressed in days, which are calendar days, and they're not business days unless they set it out. So in our Texas Insurance Code on the Prompt Payment Act, it says when you file a claim, you've got 15 days to go out there. That means calendar days. When it specifically says business days, it's excluding weekends and it's excluding holidays. But if it just has the days in it, it's assumed that it's calendar days if it doesn't specify that it's business days. The claim file, this is the definition in the standard. The claim file includes all electronic databases. So that's like anything. It could be in writing, it could be electronic, your phone system if it's recorded. That's all considered claim file. Documentation's not only the file notes, but any form relative to that claim file. If you made a note, that becomes part of the claim file. I'm talking to you on the phone. a claims file. Notification of the claim can be made by any party, not just the insured. So that means that an attorney could call it in, a public adjuster can call it in, a contractor could call it in for you, but usually they'll have to double check and make sure that you agreed to that. Sometimes insurance companies don't want some third party to do it, because what if it is fraud? What if you're in the hospital and somebody, and this happened during Hurricane Harvey on the coast like Rockport. I went to a town hall, which was really thrown by attorneys, not by TWIA, Texas Windstorm. Which I didn't know until I got there. I got invited, not by the law firm, by some potential clients that I was going to meet. And some lady said that she had evacuated because they were told to evacuate. She evacuated and she came back to her house maybe 12 or 15 days later, because remember, it rained for 10 days straight here. So she came back and there are people working in her house. And she didn't hire them. She didn't give them permission. They had filed her claim and like came in. They were travelers from Ohio. I don't want to say the word gypsy, but that's what they were. And they didn't have the right to call in the claim, and they actually hired themselves. But now, because they're in the house, even without a contract, she had the potential to have a lien filed on her house because they did services in her house and they bought material or whatever. So that was illegal. She had to file something with the Texas Attorney General to say, hey, some total strangers came in my house. Then insurance considered that vandalism, because they started doing things without insurance and building back and saying whatever before insurance actually had an opportunity to come out there and inspect it. So she had to actually file on her homeowner's insurance, not Texas Windstorm, because Texas Windstorm, TWIA, what we call TWIA, only does from the storm. So vandalism fell under her homeowner's insurance. So now she had two claims that were going at the same time: vandalism on the company that popped in and filed her claim for her and started doing the work without her permission. Anyway, that was just weird, but that happens, obviously. Misrepresentation of the policy. Section 5 says they have to be honest and even-handedness. I call that our good faith and fair dealing, is what our Texas Insurance Commissioner sets out, and they cannot misrepresent what the policy says. So I'm just going to spell these out because I think it's important. No insurance company shall fail to fully disclose to the first party claimants, which is the homeowner or the person who owns that policy, all pertinent benefits, coverages, or other provisions of a policy or a contract under which a claim is presented. And that could be something as simple as, hey, I have coverage for a rental car, and they misrepresent to you that no, you don't have that coverage when you do. That would be, bad, but they're not supposed to do it. No agent shall conceal from that homeowner or that policy holder benefits, coverages, or other provisions of any insurance policy or insurance contract when such benefits, coverages, or other provisions are pertinent to the claim. So they can't say, oh, you don't have coverage for water mitigation. I had one where they said we don't pay for emergency or water when it was covered. So that was a misrepresentation. That claim is actually with a lawyer. A claim shall not be denied on the basis of failure to exhibit property unless there is a documentation of a breach of the policy provision in the claim file. No insurer shall deny a claim based upon the failure of a first party claimant, so the person who owns the policy, to give written notice of loss within a specified time limit unless the written notice is in the policy. So here's an example. State Farm in their policy says you have 2 years to make a claim. So if a storm happens today, you would have 2 years to actually file that claim. Most policies, State Farm's the only one I know, and again, I probably don't know every policy, but State Farm's the only one that says you've got 2 years to file that. Most policies, and it has to be in writing in that policy. So if you're looking, it will say you have 350, whatever, you have 1 year, or they will say how many days past that. Sometimes they say within 6 months you have to file a claim. You have to look at it, or the PA has to look at it if you hire a public adjuster. But those are really important. It can be limited, it can be extended, but it has to be in writing in the policy, not on the side, in the policy. And chances are it's there. So no insurer shall indicate, but let me back up. And I'm not giving legal advice. A policy cannot say you have to sue us within a certain amount of time if there's a statute that says you have 2 years on 4 years on a breach of contract, or 2 years on misrepresentation, or some extra contractual things. The policy cannot alter what a state statute may afford you. So if they do, or if the policy does, then the legal side is going to do it. However, when it comes to something like filing a claim and how they're going to pay that claim, not a lawsuit, that can be in their policy, and that's now their rule, as long as it doesn't say you have to bring a lawsuit within 1 year. If the statute says 4 years for breach of contract, it's 4 years for breach of contract. If it says the statute says 2 years for extra contractual, like the deceptive trade practices or something like that, then that applies. The policy cannot limit that. Okay, so I just want to point that out. Also, no insurer shall indicate first-party claimant, so the person who owns a policy, that the payment draft or the check or any accompanying letter, that payment is final, or a release of any claim has to be done before like by you cashing this check. I get this all the time. Everybody's like, well, I've been sitting on the check. I don't want to cash it because I'm afraid they're going to say, well, you took it, you cashed the check, so that's it, final. This is saying, no, that's not true. Plus, I've said this before, if insurance thinks they owe you, even if you think they owe you $500 and they think they owe you $5, they have to give you that $5, and they have to give you that $5 within a time frame. And here it says whatever the insurance commissioner says, and ours says 5 business days. Once they determine that they owe you, they've got 5 business days to give it to you. Now, it can't say final on it. They can't tell you it's final. They can't write it's final. It's not final unless you signed a final release and settlement agreement, unless you agreed to that in writing in another document. That's different, but not that check. And then in summary, best practices. So I always talk about good faith and fair dealing. That kind of falls within best practices under the NAIC. Best practices indicate that claims adjusters should avoid unfair claims practices by knowing and complying with the laws and regulations that apply to their activities. And here's an issue that I have. A lot of our insurance companies are based out of Florida, and Florida law and Texas law may not match. So they really need to know when they're doing business here and adjusting here, they need to know Texas law. So they don't get to apply Florida law to Texas. So anyway, I wanted to put that out there. Again, stay safe and be prepared.